Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is December 29th, 2022. And we're still waiting, not necessarily for Bitcoin to break out. Yes, we're waiting for that. But most importantly, we are waiting on the DXY to break down, okay? I've been saying this is the most important chart in crypto and in most markets, in most, stock markets, whatever markets you're looking at, risk on assets. This chart is crucial, okay? And here's what has happened thus far, okay? If you're not subscribed, you don't follow my work. Essentially, we're looking at this head and shoulders, a bearish construction. This pattern is typically bearish, and it's confirmed once you break the neckline, okay? That's what happened today. We broke the neckline of this pattern to the downside, confirming the head and shoulders pattern, okay? Up until now, this has been strong support, okay? Every time we came up here, we moved. Came down here, we moved, right? Over here, really strong reaction, and finally, we ran out of steam. We finally broke that neckline, okay? That's a huge deal. Actually, look at this, okay? This is what happened all of today. Today's the 29th, right? This is what we've put in today. That is encouraging. That is very encouraging for a continuation to the downside, okay? Excuse me. And when we're talking about a continuation to the downside, we're obviously talking about a continuation of this major trend on this chart, okay? The DXY is breaking down. If the DXY breaks down, then crypto, stocks, risk on assets in general go up. That's the correlation. Why is it correlated? Because the dollar, the US dollar, is the underlying asset that everybody uses to buy crypto with, everybody uses to buy stocks with, so on and so forth. So if the value of the dollar goes down, then the value of crypto stocks go up. It's math, okay? Now, this is really, really interesting because thus far, okay, we've put in this head and shoulders pattern, and this has taken almost 2 weeks. Actually, a little more than 2 weeks. Excuse me, about 16 days, okay? It's been about 16 days since we've put in this bearish construction, and we've been playing, like I said, with this neckline. But finally, we broke the neckline, okay? What's this? And I said this yesterday. Once you break a neckline, okay, either up or down, what you have to do is retest it before you continue, okay? That's trading, charting 101, okay? So that's essentially what we did today. Very encouraging. We finally broke the neckline. We were retesting it. We're currently retesting it. And what we're waiting for is the rejection from the neckline to break down, okay? We thought that we were going to get that here, okay? But obviously, at no point in time have we ever really breached the neckline as we did today. You can see that on the chart, okay? I'm not making that up. I think this is quite clear that this is a neckline that's been established, and you've come down to a level you've never really come down to, okay? Very encouraging. Also very encouraging, if you go on the really small time frames, the 15-minute time frame, what do you see? You see that you're overbought. Okay, obviously we talked about this yesterday. If you really look at this chart on major time frames, from daily down to the 15-minute, you're overbought. The daily, you've been overbought for quite some time. For those 2 weeks that you formed this head and shoulders pattern, you've been overbought, as you can see here. Okay, you've been overbought. And of course, I'm referring to the stochastic RSI, our main and favorite momentum indicator on this channel, okay? The 4 hourly time frame is cross bearish, okay? It was overbought this morning, okay, and at the top, and it's come down, but it can stay open, okay? As long as it doesn't cross and make its way back up, it's fine, even if it's in oversold territory. The hourly time frame, it's gone back up, but here's what. If you're one of those traders, chartists, somebody who relies heavily on these indicators, understand that sometimes you can stay in this oversold territory and just do something like this, okay? Same thing can happen in overbought territory when in a bullish momentum, right? But in a bearish momentum, you get something like this on the smaller time frames. That's perfectly normal. So don't necessarily expect it to have to come all the way back into overbought territory before going back down, okay? And obviously, going back to the 15-minute time frame, we're looking at it. It is in this region, in this overbought region, and that also represents the top resistance of this larger neckline, okay? So that is very exciting. And okay, obviously I showed you a pattern that's about 2 weeks old that would break to the downside, okay? That's a good move. But what's really exciting and why we're looking at the DXY and why this is so important is for this reason. Again, if you don't follow my work, you know that that pattern that I just showed you, that magenta head and shoulders, is just a smaller version of this larger head and shoulders that's playing out. And actually, this one, this entire bit is a retest of this neckline right here, okay? Breakdown, retest. And so we're basically doing the same thing that I just showed you on a smaller time frame on a larger time frame. This is why this pattern right here, breaking down, is so important, because it's not just the breakdown of the magenta head and shoulders, it's also a breakdown of this blue, larger, weekly time frame head and shoulders, okay? And look, what did I just say about momentum indicators sometimes being stuck in overbought or oversold territory? This has been oversold on the weekly for quite some time. Do expect it to stay there, okay? Do expect it to stay there if we're indeed in a bearish trend, okay? No problem with that, okay? Taking it up to the monthly, look at that. So there's no wonder the weekly is staying oversold, because look at the monthly. The monthly is bearish on the DXY, and it's crossed bearish. So 3 straight bearish months. Expect a continuation of the bearish trend on the DXY, okay? Thus far, these 3 straight months, as you'll know if you're in crypto, has not necessarily translated to a bullish crypto to bullish crypto price action, okay? But we are expecting this, and this is why we're so oversold in crypto. Okay, crypto is criminally oversold for so many reasons, and one of the largest being that if you look, for 3 straight months, we've put in red candles on the DXY. The DXY, which is inversely correlated to crypto, Bitcoin specifically. Okay, so basically this is saying if the correlation plays out as we expected it to, or as we expect it to on the high time frame, we have like 10 to 12 years of data of this, okay? When the DXY goes down, Bitcoin goes up. When the DXY goes up, Bitcoin goes down. For the same reasons I explained just a moment ago, because DXY is the US dollar currency index, the dollar is the underlying asset of Bitcoin, okay? So if we're going to continue to get a bearish trend here, you can expect Bitcoin to go up. And why is Bitcoin so criminally undervalued? Just looking at this one indicator, quite simply, because these 3 months of bearish price action have seemingly been um, has not caused the expected response from the Bitcoin price. You would expect, as a result, Bitcoin to go up for 3 months. But that hasn't been the case. Okay? Jumping in on the monthly time frame, you can see we've had 1, 2, 3 red months. Okay, 1 green month, but 2 subsequent red months in crypto. So this is why when people say, oh, Bitcoin is undervalued, it is oversold. I mean, that indicator alone is showing you just how oversold crypto is. It is Bitcoin specifically and the rest of the cryptocurrency market about 3 months behind in what it should be doing. Okay, why? I don't know. But that's why we're waiting with bated breath on this pump, this reaction in the market. Are we going to get it soon? I believe so. Okay, I think we're going to get it much sooner than later. Okay, now let's move on to just analyzing Bitcoin. Okay, again, this blue rectangle that we've been in represents some support. What happened yesterday is we wicked below that support right here, and I was saying that, you know, the support level is about 16.5. Now, if you follow my work, you understand that wicking beyond a support level, wicking beyond a resistance level, does not mean you've broken the level. It's simply a wick, okay? There is a standard deviation beyond which that is a break, incontrovertible break, and that is 1,618, the phi ratio. So if you take an A wave, you measure that 1,618 Fibonacci retracement level, and you break it, it's no longer a wick, it's a break, okay? So this is a wick of this level, and we've recovered the level, okay? So we're expecting a move, okay? Not a further break of this support, okay? So we'll see what happens. Excuse me. Also, it's 5:42, and if you guys know anything about this DXY, the DXY closes trading between 5 and 6, right? Something like that, 5 and 6. Sometimes, I don't know why, it's like it keeps trading until like 6:30, but it opens again at 8 p.m., 7:30 p.m. for pre-trading. I don't know what's wrong with my chart here. Sorry, let me try and fix this. Okay, here we go. Here we go. All right, so yeah, we're expecting a breakdown at this level, okay? For a few reasons, all the reasons I stated earlier, okay? Now let's just focus on the cryptocurrencies that we're looking at, that we've invested in. Okay, so Bitcoin is likely to move from this level, and you can see a tiny move here, right? We've been moving slowly up here, but we really need a breakout, like a bullish breakout. A bullish breakout would be, you know, something about impulsive waves. One of the characteristics of an impulsive wave is that it's undeniable. It's not, what's the word I'm looking for? It's unambiguous. That's the word I'm looking for. It's unambiguous. It's not, oh, was that an impulsive wave? Was that an impulsive wave? Obviously, there are like leading diagonals that can be sometimes ambiguous, but most impulsive waves, 53535 waves, especially in a bull market, are unambiguous. You can tell that they are what they are. It just starts to run. Okay, same with a bear market, right? Because you can have impulsive waves in bear markets. So that's what we're expecting, especially if we do get that breakdown in the DXY. We're expecting that move up right here from this support level, which we've been pretty much holding for these past 2 weeks, yeah? Okay, so moving on, I think Ethereum is next. So you can see here something similar. You've been playing with these levels here. And, we're not going to count the AB bases, but you've been playing with these levels, and this is a sort of support level right here. Okay? So it is, likely, we don't know for sure, but it's likely to get a move from this support level. Okay? Litecoin seems to have come back to this support level here. And the way I'm reading it is like this. A break of resistance, retest, consolidation, breakout. That's how I'm reading Litecoin. That simple. Algorand. Okay, that's a strong move. Okay, that's a strong move right here that we just printed in the past hour. Okay, because this is, and I talked about this yesterday, right? Let's put the same, let's be consistent. I talked about this yesterday. You have a slanted channel, but it's a channel nonetheless. And what you're looking for is a break of the channel to the upside, obviously, if you're bullish. And in all of this, you can count 2 degrees of AB basing and a pivot. I would say the channel is actually up here. So you do want a strong move like this is starting to look okay? And you do want to see your momentum indicator all the way over sold so that you have a runway to go up from here, okay? But essentially you can see the same thing. Just some consolidation, some consolidation, some consolidation until you get a breakout eventually, okay? If, our bullish thesis holds. Same thing with Cardano. This is a nice move. This is a nice move. Like when you're looking for a bullish breakout, you're looking for these big bullish engulfing candles. This is just getting started, but if this continues right here, this could be it. Do you see that? Like it engulfs the previous red candle, which is very important for an impulsive move, okay? But Cardano, unlike some other assets, right? It's slanting. It's slanting, right? It's not a straight channel. It's a slanted channel. Okay? That shows some weakness. That shows some weakness, okay? Doesn't mean that it's going to break down all the way, but it does show some weakness in the chart. Again, maybe because of staking, maybe because of, I don't know, some other reason. But what's really encouraging here, excuse me, is your strong bullish divergence on the hourly time frame. You guys may or may not have noticed that. As you can see here, clearly a lower low in price action. And here, you're about to print a higher low in the momentum indicator. Okay? These K and D lines are about to cross. That strong bullish divergence on the hourly time frame. Really good sign. Really good sign. Okay, Dogecoin. Kind of still in that range, yeah? I know this is boring. I know it's tough. People think that just because I come out here and make videos that I'm not going through it just as you are. Obviously, I am. If you follow my work, I've shared a bit of, the struggle. Like, the whole idea of trading and speculating and going into a bear market, going through a bear market, and, trying to trade these moves, right? These corrective moves. It is tough. And I think it's supposed to be tough. And you're supposed to lose sometimes, I guess, if you're taking some risk, right? Because if you're taking no risk, then, your reward is technically, theoretically minimized, right? You got to take some risk. You can't take too much risk, right? Or else you lose all your chips and you can no longer play. But it's tough. If you want to buy the bottoms of markets and you want to speculate like a pro, and you want to be at the forefront, you want to get that big move, right? That first big move. It's tough because these assets are, it's not completely unpredictable, but it is to a certain extent unpredictable because there's so many different permutations and combinations that these corrective patterns can take. It's hard to distinguish a consolidation reversal channel from a wave 4, right? So yeah, I'm just saying, I feel your lack of patience, your frustration, your pain. I share those. But let me tell you something, like, there's going to be a moment, not just a day, a moment where all of that goes away. And whatever you lost, it's going to look like nothing because you're going to make a lot more than you lost. And you're going to feel like everything's was worth it. All the pain, all the checking the charts and being disappointed and waiting, all that stuff is going to be worth it. All right, so just stick with it if you're in it. Obviously, not everybody's in it, but this is not easy. It's not easy, right? People who make it sometimes get lucky, but by and large, the pros, those of us who are fastidious in our analysis and our speculation and, essentially just playing the probabilities, it's challenging, okay? But that's the name of the game. That's the business that we're in, okay? So yeah, Dogecoin, I'm sorry, I wasn't thinking. I was just drawing, not talking about something else. So I'm just going to draw it again. For those of you that may have been like, what the hell are you doing? This is bothering me. I'm sorry. This is a channel, again. This is an AB base. This, to me, is a consolidation reversal channel. And you've just been going up and down in this channel for the past 2 weeks. So we talked about the past 2 weeks in the DXY, how the DXY was in that head and shoulders pattern, right? Bearish construction. This is the analog of consolidation, but instead of a consolidation for distribution, this is a consolidation for accumulation and breakout, right? So it's like a mirror image of one another, okay? And a lot of times, these consolidation for accumulation channels end up being the opposite. So we see that the DXY was in a head and shoulders. These end up being inverse head and shoulders, okay? Just interesting observations. So yeah, this is bullish, potentially. Again, if the main thesis of the breakout plays out, you're based here. This is your support, and you take off from your support. But yeah, you like to see your momentum indicator down in the oversold territory. That's what you want to see, okay? Dodo, again, a big channel for the past 2 weeks, right? Do you see the consistency? I hope everybody sees consistency here. Whether the analysis is right or wrong, meaning the conclusions drawn as a result of the analysis, whether those are right or wrong. I think what's important is the process. It has to be methodical. You look at all these different charts, whatever you're invested in, you chart, right? You should be able to see patterns. Same thing, okay? We just talked about how you're likely to get a consolidation reversal channel, right? If you're bottoming, you're accumulating. And for the past 2 weeks, the DXY has been doing the opposite. And all of these assets seem to be giving you flavors of these consolidation reversal channels, okay? Flavors, because they're corrective waves, and so they look, the looks are varied. That's what makes them tough to read. But look at this. That the last hour's candle, very promising. That's a bullish engulfing channel, or candle rather. You've come down all the way here, but then you put in a strong bullish candle that overtakes the previous candle. That is a good sign for continuation or for a break in the pattern. Also, you love to see the hourly momentum indicator in oversold region. okay? And now that it's crossed, that's given you strong bullish momentum on the hourly time frame, okay? Again, past 2 weeks, what do you see? XRP. You see a big channel, okay? You see a big channel. You see a big channel. And that channel, actually, I would say, starts here. I would say starts here. So I think that's your entire consolidation reversal right there. This move right here. 1, 2. Let's see. 1, 2, 1, 2. So that's 2 degrees of AB basing. And I think this massive AB base is your pivot. And this is a beautiful candle. It's not yet bullishly engulfing, but it's getting close. Do you see that? Past hour, you've put in quite a bit of green. This is what you want to see at the end of an AB base, a series of AB basing, 2 degrees of AB basing in a pivot. You want to see those strong bullish engulfing candles, meaning that did its job, and now you're going into impulse. Fingers crossed. But again, very nice that you're in an oversold territory, and once it crosses, you will form strong bullish divergence. Once these K and D lines cross, maybe in the next hour, you're forming your strong bullish divergence, okay? Big, potentially bullish engulfing candles and bullish divergence, great combination for a breakout. Okay, RSR. This one's tough. Really tough. Really tough trade here. And what makes this particularly tough is that on the higher time frame, you're dealing with a massive AB base. All of this. Okay, two things. Either this is a massive AB base, or this is a wave 4 correction, and this is your wave 5. One of two things. In either case, very hard to read, because your B wave, as we said before, can span 1618 Fibonacci retracements of your A wave. So you could take your Fibonacci retracement level like this. If this were an A wave, yep, and pull it from bottom to top. If this is an AB base, you can come all the way down here, and it's a contiguous AB base. It is a legal AB base all the way down here. That's a huge that's a lot of question mark. Like, where is it going to base at? Where is it going to bottom at? Where am I going to find support to put in my trade if I want to trade the next move, right? Okay, so that's if it's in AB base. If it's one large wave 5, right? Which I don't think that is, because I'll tell you why. If it was wave 5, it would be one of those unlikely concerted wave 5s. You see that? It would be like 1, 2, 3, 4, 5. Wave 5 is concerted. It really is a short wave. It's possible, but it's improbable. You don't see those too often. So I would say it's more likely than not an AB base. But the issue with that is, what makes it tough to trade is if this is an A wave, the B wave can span so much. So, again, it doesn't make it easy to trade. So you kind of have to trade this on very low leverage if you're trading it. And yeah, I learned that the hard way. I'm just going to be honest. But again, if you're one of those people who likes to look at divergences, this is a really good sign. Okay? Because up until now, this entire move that we've gotten for 2 weeks has been slanted down. Okay? And you haven't really gotten any break in this downtrend, except for here you're getting what looks to be some sort of move that breaks this trend. Okay? It doesn't really do anything if you have to use a bunch of candles just to make a move up. What you want to get is a quick move, right? Where on a certain time frame, like the hourly, the 4 hourly, that one candle really breaks. Okay, so that's what you're looking for. And again, it's really nice that you're in oversold territories. So that move can continue and has a lot of runway. Okay. So let's just peek at the DXY real quick. Okay. Looks like it's just playing on that level, which is fine. That's what it tends to do before it breaks down big. It just kind of dilly-dallies, if you will. It just plays at that level. Okay. Again, it's 6:01 DC time, Eastern Standard Time. It should be closed. The DXY should be closed. And it should open back up at 8. Maybe it gaps up. Maybe it goes up a little more and gaps up. Okay. So at 8 o'clock, it opens up down here, and then it comes back down. I don't know. I have no idea. But it just looks like, it's a really good sign for bullish continuation in crypto, because you took all of these candles and all this time just to make it up to resistance. Do you see what I mean? So on the 15-minute time frame, clearly you're buttoning your head up against resistance. On the hourly time frame, let me just erase that. You took all that time just to make it up back to resistance. You didn't do much, okay? That basically shows an exhaustion of whatever trend this is. It's not really a trend, or, whatever move that is, okay? And so it's very likely that this is just an intra-wave correction for a continuation of the major trend, which is down. And today's been great for the DXY going down. 4 hourly time frame, again, it's still cross bearish, and it's open for continuation to the downside. Okay, so that's the DXY. Just checking in. Again, the big moves open or start up again at 8, so you should see that happen again, or you should see the open at 8 really show a little bit more volatility. In the meantime, yeah, do expect some moves, but we really will see the direction of the DXY when it opens again at 8. Okay. Synthetics. This, I think, is another example of a channel that is just slumped. I think. Let's zoom out. I'm not exactly sure. You can tell when I don't convince myself. I pause. Yeah, okay. On the high time frame, yeah. On the high time frame, if you zoom out on the 4-hour time frame, you can see past 2 weeks, this is the channel. Yeah, totally. It's a channel that's slumped, right? I'd say this is my A, my B, my A, my B, my A, my B. This is my pivot. This is putting in my pivot. Okay, and I think again, if you go back on the hourly time frame, very good that we're in oversold territories, and we just crossed. And did we get a significant move? I would say so. You know, again, these are not yet bullish engulfing candles, but they're close. Okay? They're close. They're close. And you don't have that many examples of such moves. Do you see? There are a few, but not many. So, generally speaking, I am encouraged by that. I'm encouraged by that move. Okay? So that's pretty much it. So all these other, you see all these other assets, they're in oversold territory on the hourly time frame, okay? Do you see that? Oversold territory. But Bitcoin is in overbought territory. So I wouldn't be surprised if Bitcoin did something like that before continuing. Because it's just... I mean, it can continue up from here, sure. But I don't know. Maybe, maybe not. I'm... let's see. Yeah, I don't know. You know, it's hard to say. You know, because it's not like you have to be in oversold territory to move bullishly. But I'm just playing the probabilities. More often than not, assets are in oversold territory before a big move. Okay, but it's crossed bullish here, and you have... Do you have any divergence? You actually have a little bit of bearish divergence here, right? Yeah, so I wouldn't be surprised if it came down a little bit, because you have a bit bearish divergence. But yeah, I wouldn't be surprised if Bitcoin came down a little bit and these altcoins went before Bitcoin, because as we all know, in a bull market, altcoins will front run Bitcoin. Okay, so that's my analysis. Amazing videos of the world. Hello. That's my analysis, and yeah, it's looking promising. It's looking promising. You know, the takeaway is, you know, all eyes on the DXY. Like I said, maybe 2 episodes ago, all eyes on the DXY and this pattern. If this pattern breaks down, then that means that this pattern breaks down. And that is almost automatically our bull run in crypto. It's unavoidable. Up until now, we've been going down, but not really impulsively. I mean, like, it's been going down slowly, okay? The break here, a break in this, and a resulting break of this, there's nothing slow about this. That's going to lead to really strong, impulsive, quick drawdown. And I think that's what's needed. That's a push. That's the word I'm looking for. It is the boost, or it's the trigger that's needed for a bull run in crypto. That's the trigger that's needed for a bull run in crypto. We need to break that support on the DXY. Okay? So that's pretty much my analysis. Fingers crossed, because I'm just getting tired. I'm getting tired of waiting for it, you know? A lot of this is mental and psychological. Gotta psych yourself up, stay positive. But you know, I'm just getting tired of seeing sideways price action. I'm really tired of it, to be quite frank. So yeah, I would love to just not have to track any more sideways or downwards price action. You know, little bits here, little bits there, sagging channels, corrective pumps. I'm so tired of it. All right. Amazing Videos of the World says altcoins pump first, then Bitcoin. Yeah, typically in a bull market, that is the name of the game. Yes, I am also waiting for waiting from sideways. Yeah, nobody wants to see sideways price action anymore. We're tired of it. Oh man, we're tired of it. Actually, let's have a quick look while we're at it before we end the stream. Is anything pumped? Let's see. In our watch list, our general watch list, Happy is pumped a little bit. So is S&M, but it pumped already before. That's the one that pumped 600%. Band, look at that. That's a nice 5-wave move and the 3-wave declension. Looks like it's gonna go again. ETH Classic or ETC, whatever that is. One chain or SHIB. SHIB looks like it went a little bit. Nothing's really done much. Let's just be honest. Like, this is a few percentage points, which is not bad, but it's not what, you know, we want real big moves, okay? We're waiting for the big moves. So, yeah. Here's hoping we get it, right? And when we get it, like I said, one of the characteristics of bullish price action that's impulsive is there's no question. Whether you read a chart or not, you know, if you know anything about, you know, if you know price action, you know for sure, okay, when you see it, you know what you see. You know what I mean? So let's hope we see that. Because, yeah, I don't want to see any more. Amazing Videos of the World says, can you check Dent? Absolutely. Let's have a look at Dent. Probably in here somewhere. Oh, it's not. Let's add it. Let's add the Binance. Oh, Dent seems to have done something. Let's see. I haven't looked at this in a while. Okay, that is... Okay, so what happened with Den is it came all the way, it broke, it didn't break it. Okay, so here's what happened with Den on the high time frame. So this is the bear market accumulation for Den, okay? From May until present day, so 200 plus days of consolidation reversal, okay? That's quite clear. What happened yesterday or 2 days ago, the 28th, yesterday, is it went all the way up and basically tested the resistance of this entire bear market accumulation, but did it in a corrective way. So you could say that this is 1 degree of AB basing, all of this is 2 degrees, or sorry, this is 1 degree, this is your B wave. You can say this was your A wave and that was your B wave. So you put in your 2nd degree B wave just right there. That was your 1st degree A wave, or 2nd degree A wave, sorry, and your 2nd degree B wave. Okay, and now you're putting in some sort of consolidation or some sort of pivot to continue up. That's how I read it. Because if this can't be impulsive right here. Why can it not be impulsive? We know that impulsive moves always respect the 0.618 of the previous of the previous pump. So, sorry, it doesn't have to be a pump because it can go down. Impulsive moves, if you're going in one direction, you can only come back, generally speaking, okay? Generally speaking, within, you know, how do I say this? I'm trying to find the English. Based off of, you know, a probability, that's how an impulsive move works. You come back down and respect the 0.618 or Fibonacci retracement level, the golden mean of that previous move, up or down. So you could say the same thing for down. If you're going to correct up, you respect the 0.618 before you continue, okay? So because that didn't happen here, you know that this is more than likely a corrective move. 1, 2, 3. That's why I'm counting it like that. And 1, 2, 3. Okay? And for that to make sense, then this should be your 1st degree of AB basing. And again, that's really difficult to read. This is why I'm always saying AB basing, tough as heck to read because, I mean, you could, here's an alternative. That could be A. That could be B. I don't like that though. It doesn't look right to me. This is both art and science. That doesn't look right to me. That initial count, 1, 2, 3, all of this, that B wave took from June to November. That is tough. Okay? I think that was it. That was the 1st degree. And this was the 2nd degree. And now you put your pivot in and you're finished. Okay? Again, I always say, for these AB bases and reading these corrective patterns, easier to read after they've formed. But how do you know if they formed or not? That's why it's both an art and a science. There's no now that I know how to read it, I'm going to be able to read every corrective pattern or every corrective move. Like, good luck, you know? If that were the case, I'd be a Brazilianaire right now, you know? It's tough. It's challenging. I guess that's what makes it fun. I like challenges just inherently. I say I don't sometimes, some days where I'm like, I don't want to deal with this anymore. This job sucks, and it's tough, but I really do like challenges, and that's part of why I love charting. But yeah, that's what I read in Dent. You're in that, you're basically in that channel that you've been in since May, that pretty much every altcoin has been in since May and June. And it's an accumulation channel. You haven't done anything except you put in that last move, and now this would be a perfect entry for, not financial advice, but if you are investing, you want to look at it simply. This is a channel, quite clearly, okay? This is a channel. One of two things can happen. This channel breaks down or it breaks up, right? We're saying our main thesis on this channel is that all of these channels that you can read for the past 200 days, sometimes they're slanted, sometimes they're straight like this one, right? Sometimes they're slanted up, sometimes they're slanted down, whatever. These channels are accumulation, consolidation, reversal channels, okay? So eventually they're going to break up, okay? But some people think that Bitcoin's going down to below 10,000, in which case these channels would break down. But I don't believe that. But if you are of the belief that these channels are going to break up and this is a Wyckoff accumulation or AB base, whatever you want to say, this is the ideal purchase. This is the ideal entry point. Why? Because if this is a channel, you want to buy the base of the channel. You want to sell the tops, right? And then in the middle serves as resistance when you're below it and support when you're above it. That's channel charting, okay? That's technical analysis of a channel. So that's what I'm seeing with Dent. And that's why how I would explain why it went all the way to the top of its channel and then came all the way back down, because I think that was a corrective move, and that's why I counted this as 1, 2, 3, right? Corrective move, and then somewhere in there's a 3-wave move down. That's another AB base. Okay, so I hope that helps. Thank you, Jazakallah Khair. Thank you. Dent can Dent reach $3? I don't know. I don't know if we've discussed this before, but okay, look at that. That looks great, by the way. So if you go on a high time frame, okay, and you pull a Fibonacci retracement level, okay, assuming that Dent did 5 waves up, okay, and 3 waves down, that this is indeed an impulse, right? This is indeed a what would you call it? Sorry, one second. Okay, there we go. This is indeed a 53535 Elliott wave impulse. Then the next target is quite simple, okay? And you guys should all know this because I talk about this quite a lot, and this is basic Elliott wave theory. Okay? If this is a 5-wave move, okay, how are the ways we can try to ascertain whether or not this is a legitimate impulse? Okay? We can use a time component. So you would take your time measurement, which is here. Okay? Take the time you went up, okay, which is approximately 392 days, okay? 392 days. And then the time you came back down, 392 days. That is very likely an impulsive move because waves of the same degree are comparable in time and in price, okay? The time component matches. Now, I know some of you are saying, well, Dean, that move, you just left all of that out. That is not part of this. This is the move. This is the declension. This is the correction of these 5 waves. This is what I just talked about, the consolidation reversal, right? That was the theory. That was the thesis, rather. That these channels that you've seen for the past 200 days are consolidative. They're accumulative, right? They're what you do after price comes down and you go sideways for a bit to reverse the price. And that looks very, very promising to continue to the upside. Okay, I'm getting to the price prediction, which is quite simple. This is the simplest way to make a price prediction. This is the easiest price prediction we can make using Elliott wave analysis. And I think Elliott wave gives us the tools to make these kinds of price predictions right here, because we have everything. We have the 5 waves up, we have the 3 waves down. So if this is wave 1 and 2, then projecting wave 3 is simple enough, right? Wave 3 is simply the projection of wave 1, retracement of wave 2, and the extension between the 1618 and the 2 Fibonacci extension of waves 1, retracement of wave 2, right? And now we've shown that both the 5 waves up and the 3 waves down took 392 days, almost to the day. So that is really, really, really supportive of the idea that this is likely an Elliott wave impulse. Also, you may or may not have noticed when you pull the Fibonacci retracement level, what happens? It respects the phi ratio, the 0.618. So you're basically buying right here, if you're buying now, on mathematical support, okay? And that's exactly what the theory says. Elliott wave theory says wave 2 respects the 0.618, okay? The maximum retracement of wave 2 is 0.618 by and large, okay? So the question was, can Dent reach $3 okay? Right now it's at a fraction of a penny. So if you pull the Fibonacci retracement levels, wave 1, retracement of wave 2, extend to wave 3, minimum, the minimum extension of wave 3 is 20 cents, okay? That's at the 1 Fibonacci extension. That's rare. But, you know, wave 3 minimally extends to the 1 Fibonacci extension. Maximally, it's, you know, unbounded because you can have an extended wave. But by and large, typically, wave 3 will fall in this region between $7.50 and $69.80. So if you were to ask me, is Dent going to hit $3? I would say very likely. I think it's likely to hit anywhere between $7.50 and $69.80. That is my answer. So yeah, I hope that helped. Amazing videos of the world. So yeah, that's pretty much it for me, guys. I hope that was helpful. I hope this was useful. Let's really hope that we get some moves. I'm just tired of this shit. It's so annoying. But yeah, you know, this is why, you know, we're pros. This is why we make it eventually, because we're patient, and we're more patient than most people can even imagine. Most people don't want anything to do with crypto, and they think it's a scam and all that stuff, and you know, they're not even thinking of investing in it, and they're what's the word I'm looking for? They're long gone. Most people are long gone, okay? If you're still here, you're literally still here at the bottom. If you're still watching, if you're still paying attention to these kinds of videos, you're going to make it. It's not a question of if, it's a question of when. This is the bottom, likely the bottom of the market, and you're still around. So, I mean, this is when you get those massive, crazy returns on investment, like we just showed in Dent. So, yeah. Much love to you as well. Amazing videos of the world. Take care, and I'll see you all tomorrow.